Welcome back to the deep dive. Today we're looking at something, well, huge. We're peering into the future of AI. And what we found involves, honestly, just colossal sums of money and more raw electricity than we usually track. You see, the AI landscape, it's undergoing this massive tectonic shift. But it's not really because of some, wild new algorithm or coding breakthrough. No, it's driven entirely by one thing, this huge, just truly insatiable demand for computational power.
Yeah, it's all about the compute. And right at the center of this whole thing, OpenAI, they aren't just buying hardware anymore, not at all. They've become this active and incredibly powerful architect of the whole global supply chain.
So today we're diving into OpenAI's strategy. It seems to rest on three pillars, right? All designed to secure the sheer quantum of compute power, we're talking gigawatts, needed for their big goal. Artificial general intelligence, AGI.
Exactly. And what's really fascinating here is that this isn't just procurement. It's not just shopping for chips. It's more like a declaration of war on cost. OpenAI's strategy, it's a very deliberate effort to commoditize the accelerator layer of the tech stack.
Commoditize. How so?
Well, they want to shift the primary source of economic value and the pricing power, crucially, away from the silicon itself, away from where, NVIDIA has reigned supreme for so long, and move that value up to the AI models and applications where OpenAI plans to rule.
Wait, hold on. Commoditize. That sounds risky. I mean, if OpenAI is the world's most important customer, the biggest buyer, why would they intentionally attack the very supply chain they depend on? It feels, unnecessarily aggressive.
Because the cost of compute is the bottleneck. It's the single biggest hurdle on the path to AGI. They feel they have to break the current pricing model. Think about it. Their ambition is what? 250 gigawatts eventually. To even get close to that, they need serious competition in the hardware market. And that fundamental need, that's what drove these two huge partnerships that basically reshaped the entire hardware landscape back in late 2025.
Okay, let's unpack these two deals then, these massive deals defining this. Great compute realignment, as you called it. First, the incumbent, the NVIDIA Pact. This makes NVIDIA their preferred strategic partner for compute and networking. And it commits them to at least 10 gigawatts of NVIDIA's next-gen systems.
Yeah, and that commitment is incredibly specific looking ahead. The hardware focus is all on the upcoming Vera Rubin platform, and crucially, that first 1 gigawatt phase, targeted for the second half of 2026, H2 2026. So the timeline guarantees OpenAI gets access to the absolute cutting edge pretty much the moment it hits mass production.
Okay, now here's the part that sounds wild. The financial structure. This is an investment loop. NVIDIA plans to invest up to $100 billion in OpenAI.
That's right. But it's not just a check up front. That capital gets released progressively, bit by bit, as each gigawatt of compute capacity actually gets deployed and switched on.
So it's a closed loop. The investment basically pays for the hardware, which then unlocks the next chunk of investment.
Exactly. It's a fascinating structure. Now hold that thought and contrast it with what they did just 2 weeks later. The AMD partnership. This is the challenger stepping up. A multi-year deal for 6 gigawatts of AMD Instinct GPUs. The direct challenge to NVIDIA is, well, it's unmistakable.
And the timeline seals it, doesn't it?
Precisely. AMD's first 1 gigawatt deployment using their Instinct MI450 series, also scheduled for H2 2026. That parallel deployment sets up an immediate, direct, large-scale hardware bake-off right there in the field. They're essentially testing both platforms at the highest possible scale, side by side at the same time.
Wow. And for AMD, this deal must be just completely transformative. Let's give you some perspective here. AMD's total revenue for all of 2024 was around $26 billion. This single deal is expected to bring in tens of billions annually, potentially over $100 billion in new revenue over 4 years. It's company-making stuff.
It absolutely is, but the detail you really need to know, the strategic kicker, is the equity part. AMD issued OpenAI a warrant, basically an option to buy up to 160 million shares of AMD stock. That's potentially a 10% stake in the company at a nominal price, almost free.
A 10% stake?
Yeah, and the vesting of that warrant, when they actually get the shares, it isn't just tied to deploying the GPU successfully, it's also tied to AMD's stock hitting these ambitious rising price targets. The final piece unlocks only if the share price hits $600.
Okay, that is brilliant. It completely changes the dynamic. OpenAI isn't just a customer anymore. They're a deeply invested partner. It gives them this huge multi-billion-dollar reason to throw serious engineering resources at making AMD successful and helping them genuinely challenge NVIDIA. Which brings us back to the why. Why this massive effort to build a duopoly?
It's strategic de-risking, pure and simple. Born out of necessity, really. Like we said, OpenAI is aiming for 250 gigawatts by 2033. That kind of demand makes them the most important customer on the planet. It gives them the power of a kingmaker, right? They can basically elevate AMD overnight with a deal like this.
So they use that power to ensure they're not locked in.
Exactly. Strategic imperative.
Oh.
Dual sourcing. You just can't rely on one supplier for infrastructure this critical. It's too risky. By validating AMD at the scale, they guarantee resilience, and they inject fierce competition, specifically designed to attack what people call the NVIDIA tax, those incredibly high profit margins, sometimes 80, even 90%.
Right. Okay, so NVIDIA for the cutting edge, AMD for competition and scale. And then there's the third pillar, the really long-term play for cost control, Project XPU, their own custom chips.
Absolutely. And this isn't some side hustle. We're talking a massive $10 billion deal with Broadcom just for the design work and fabrication, handled by the best, TSMC, using their top-tier 3-nanometer process.
So what's the focus for these homegrown chips? Are they trying to, train the next GPT on their own hardware?
No, and this is key. The focus is incredibly pragmatic. It's AI inference. The process of actually running the trained models for users. That eats up the vast majority of operational compute costs when you're operating at OpenAI scale. So optimizing that piece of the puzzle offers the biggest bang for the buck long term, much more than optimizing the initial training cost. And guess when mass production is targeted for these XPUs?
Let me guess, 2026.
Bingo. 2026 again.
So the whole triad comes together beautifully. NVIDIA for the absolute bleeding-edge training with a mature software stack. AMD brings the competition, the resilience, the scale, driving prices down. And their own XPUs offer that ultimate long-term cost optimization, specifically for inference. It's a multi-pronged attack on their biggest expense.
Precisely. A very well-thought-out strategy.
Okay, let's shift gears a bit and dive into the tech specs for that H2 2026 showdown. We've got NVIDIA's Vera Rubin going head-to-head with AMD's MI450 series. What are the actual hardware trade-offs we're likely to see when these things finally light up?
Well, it looks like a classic strategic divergence, actually. Both are using advanced chiplet designs, latest TSMC nodes, so they're both state-of-the-art. But AMD seems to be making a big bet on memory. The MI450 is projected to offer up to 432 gigabytes of HBM4 memory.
432 gigs, that's a lot, right?
It is. Compare that to NVIDIA's Vera Rubin, projected around 288 gigabytes, so roughly 50% more memory capacity on the AMD chip. And that extra capacity, it's really critical for these massive language models that need enormous context windows to work well.
Okay, so AMD wins on memory capacity. Where does NVIDIA keep its edge?
Raw compute throughput. NVIDIA's Vera Rubin is projected to maintain a lead there. We're hearing numbers around 50 petaflop PS of theoretical dense compute performance compared to maybe 40 PFLO PS for the MI450. So NVIDIA likely keeps the crown for sheer number crunching speed.
But these specs, they highlight something else, don't they? A physical limit that's becoming maybe the main bottleneck. Power. We're talking insane numbers here. The MI450 is rumored to have a TGP, total graphics power, up to 2,500 watts. And Vera Rubin isn't far behind, maybe 2,300 watts. That's per chip.
And this escalation, this is the critical insight for you listening. It means the primary constraint on AI progress is fundamentally shifting. It's moving away from just silicon design towards the physical world's ability to actually generate, transmit, and critically cool the required energy infrastructure. Think about it. Every single one of those 1 gigawatt clusters, it needs the power of a small industrial city.
Wow. Which brings us neatly to NVIDIA's core defense, their real competitive moat, despite all this money being thrown around. The software.
CU. Absolutely. It's proprietary, yes, but it's incredibly mature. It works. And it has this enormous developer ecosystem built around it over years. Industry estimates put the number of engineers comfortable with CUC at maybe 5 to 10 times larger than the pool for AMD's alternative ROCm. That ecosystem, that stability proven at massive scale, that is a huge, huge barrier to entry for any competitor.
But ROCm, AMD's challenger, it is open source, and it seems to be catching up. I mean, historically it lagged, but the recent versions, 6.x, 7.0, they seem to have made real strides. We're even hearing some startups report they've hit software parity for specific LLM tasks, meaning for those jobs, ROCm performs just as well as CUD now.
That's the crucial point. That's the hinge for this entire AMD mega deal. It's long-term success, those multi-gigawatt deployments. It all hangs on whether OpenAI's deep engineering support, driven by that juicy 10% equity incentive, can actually accelerate ROCm's maturity fast enough to truly challenge CUD's dominance across the broad range of AI workloads OpenAI needs. That's the $100 billion question.
Right. Okay. Given the absolutely astronomical figures we've been talking about, that $500 billion Stargate project estimate, the $100 billion NVIDIA investment loop, we have to talk about the risks, the systemic risks. Is this massive infrastructure build-out a smart bet on the future? Or are we potentially hearing the inflation of another tech bubble?
That's the critical question, isn't it? And the concern is definitely valid. It has historical parallels. Let's start with that NVIDIA OpenAI circular investment thing again. Like we said, the $100 billion investment is expected to flow pretty much directly back to NVIDIA as revenue from GPU sales. Critics jumped on this immediately, calling it bubble-like behavior. They're drawing parallels to those vendor financing schemes. Remember those from the dot-com crash? Cisco, Nortel.
Yeah, where the vendor lends the customer money to buy the vendor's own equipment. So the risk is this structure inflates sales figures on paper, and it basically transfers the hardware depreciation risk onto NVIDIA's books, masking the true cost of getting these GPUs.
Exactly. That's the worry. Though, the bull case is pretty clear too. NVIDIA locks in its single most important customer for years to come. And they get potentially massive returns on that equity stake if OpenAI's valuation keeps skyrocketing like it has been. But the overall bubble fear is broader than just that one deal. We saw that stark warning from Bain & Co., suggesting AI companies might need to generate something like $2 trillion in annual revenue by 2030 just to cover these compute costs and their projection. The industry could fall $800 billion short of that. That's a huge gap. You're hearing prominent investors already warning about a tremendous amount of capital destruction coming.
Oof. And there's another, maybe more subtle risk. Something about accounting practices at the cloud providers.
Yeah, this is important too. The hyperscalers, the big cloud companies buying tons of these GPUs, they've been sort of quietly extending the stated useful life of these GPUs on their balance sheets, stretching it from maybe 3 years historically out to 5 or even 6 years. What does that do? It lowers the annual depreciation charge, which boosts reported profits in the short term. Makes the numbers look better.
But does that match reality? Do these GPUs actually last 5 or 6 years running flat out?
Well, real-world failure rate data suggests probably not, especially running at these extreme power levels 24/7. The practical lifespan might be much shorter, closer to 1 to 3 years in many cases. So you get this growing divergence between the accounting fiction and the physical reality. It creates this kind of time bomb on the balance sheet that could lead to sudden, massive write-downs later on, which could really shock the market if it happens across the board.
Okay, so wrapping this up, what does this all mean for you listening, trying to navigate this incredibly fast-moving market? Let's recap maybe the 3 key takeaways from this whole realignment. First, OpenAI is actively, strategically trying to commoditize silicon. The whole game plan is about driving down costs, de-risking their supply, and hitting those high NVIDIA margins.
Second takeaway, the AMD deal is real. It's a validated game changer. That 6 gigawatt scale plus the 10% equity warrant, it creates a credible duopoly. It signals the end of the single vendor dominance in high-end AI compute.
And third, the real competitive fight now, it's shifting. It's moving away from just chip design specs. It's increasingly about the software, that ROCm versus CUDA battle, and the underlying physical infrastructure, power, cooling, data centers.
Which brings us to the key signpost for you to track going forward. This whole technical and financial battle. It's going to be decided in the field and soon, less than 2 years now. The real-world data performance, power efficiency, and critically, total cost of ownership, TCO. From those initial H2 2026 deployments of both the Vera Rubin and the MI450 clusters, that data will be the ultimate verdict. That's what will determine which path OpenAI doubles down on next, and by extension, shape the future of the entire AI supply chain.
Okay, so watch that H2 2026 data closely.
Definitely. And here's maybe a final provocative thought for you to mull over. Given the extreme power draw, 2.5 kilowatts per chip, and the sheer scale of these plans, that 250 gigawatt goal, maybe the ultimate long-term bottleneck for AI progress won't be our ability to design even faster chips. Maybe it's simply the physical world capacity to generate, transmit, and efficiently cool all the energy required. If that's true, are the companies specializing in energy, in power infrastructure, and advanced cooling? Are they becoming even more valuable than the chip designers themselves in the long run?
That is a really fascinating prospect, something to definitely think about. Thanks for joining us for this deep dive. We'll catch you next time.